wealth builders, welcome back to another episode of The Bemused. I'm Akiva.
And I'm Misha.
And in today's episode, we are talking to you guys about a really big life change, life event that recently took place. And by recently, I mean it's been 5 weeks since this happened, but we've been a little bit busy. But as you guys can tell by the title, we bought a house. So in this video, we're going to be talking about all the numbers, focusing on all the costs, what it took for us to get into this home, how much it's going to cost on a continuing basis to upkeep this home and maintain this home and live in this home. So all the details coming at you. You guys know we don't hold back. We don't shy away from this stuff. So all the nitty gritty you're going to learn about in today's video. If you're new around here and you are into the content that we put out, which is all things money for young adults like ourselves, go ahead and hit that big red subscribe button, and while you're at it, hit the notification bell so you never miss when we post new valuable content.
So we purchased a 2-bedroom, 1-bathroom townhouse in the greater Boston area. We actually closed on July 31st, 2020. So like Akiva said a little while ago, but there was a lot of work that we needed to do for it to be comfortable for the both of us after our wedding date when we move in. So before I start rambling and going on and on about the house, we're just going to dive into the numbers because we know that that's what you guys really want to know, at least in this video.
So the purchase price of the house, let's start there. So we paid $242,000. That was the purchase price of the home. And we got a super dope interest rate, and we'll talk more in another video about why we chose to even buy a house in the first place. You guys know that was not something we ever talked about, something that was not on our radar really at all. So we'll talk about the background of that decision. But our interest rate was 2.94%, which was super great. So we really got a really good deal there in terms of the current interest rate environment. We used a specific first-time home buyers program for the state of Massachusetts to purchase this home. And so with that program, we only had to put 3% down as our down payment. Now, in the end, we ended up putting 4%, and we'll talk about more about the whole process and, the pains and the victories and the low parts of this whole entire ordeal. But we ended up putting only 4% down of the purchase price to buy this home. And so our mortgage amount, what we actually financed, ended up being $232,320, if I'm not mistaken. I think that's right. Gotta check my math. So I have all my papers here so I don't forget, all these numbers. It's a lot of numbers that we're going through.
The number one thing that we had in mind was that we wanted to make sure that in order to stay on budget, that we took market research as to what the cost of rent is in the greater Boston area, Akiva's lease, because I was going to be moving to that area, what the increased cost was going to be because her rent was going to be going up. And we took all that into consideration, how much we would be paying all in for an apartment. So the rent, the utilities, all of those things, travel to and from work, everything went into this. And that helped us really determine, well, how much can we even afford to pay on a monthly basis? And I know sometimes that can be a bit challenging to even know what you can afford when you're buying a home. When you see some of these really large numbers, 300, 400,000, 500 and more, what does that equate to, on a monthly basis? And then even though the mortgage amount might be one projected figure, then you also have to calculate everything else. So the utilities and all of that. So we wanted to make sure that we were sticking within around, what our combined rent amounts were. More so Akiva, we focused it more on what her amount was that she was paying and kind of went off of that. So our gold standard was if we saw a house and it was going to be similar to what Akiva was paying in rent, it made sense.
Like I said, homeownership has various layers of costs. It's not just your mortgage. It's not just the purchase price of the home. There are lots of factors to consider. So in this video, we're going to go through the different costs of home ownership. So we're going to talk about the down payment, which we spoke a little bit about a few minutes ago, but we'll go into more detail about that. The down payment, all of the closing costs in detail. We're talking about what our monthly mortgage payment is. We're going to talk about PMI a little bit, and homeowners insurance, property taxes, the utilities we have to pay, our HOA fees because our home is in an HOA, and maintenance and repairs. So just all of the things that sometimes first-time home buyers don't really think about. They just focus on the purchase price and what the mortgage payment will be, but there's so many other costs that you have to keep in mind. So we're gonna go through all of those costs right now. So like I said, the down payment, we ended up putting 4% of the purchase price down. So that equated to $9,680 that we paid as a down payment. So that, of course, it's just in terms of how it affects our net worth, that was more so just transferring out of cash and really into the equity that we started off with in our home. So that was $9,680. And now I'm sure that those of you guys who watch our net worth updates are probably just like, yep, all that cash we've been sitting on for all of these months definitely came in handy when it came time to make this decision, really with a quick kind of turnaround and be able to be in a position to comfortably purchase a home without putting ourselves into, you know, our financial straitjacket while simultaneously paying for a wedding that costs a lot of money, which is another story for another day. So now let's talk about closing costs. Closing costs are really those sunk costs. They don't translate into equity. This is basically money that we've thrown away in essence.
I personally call them the hidden fee costs, honestly. Not that they're like, you know, trying to scam you in any way, but it just depends. The answer is really sometimes not always straightforward. We're working with our loan officer throughout the entire process, who was very good, but he was giving us some estimates and we were planning off of those estimates. It turned out to be a little bit higher. So you just always have to make sure that you, one, know everything going in and you are, you know, planning accordingly, because just because they tell you your closing cost might be $5,000 doesn't mean that it'll be exactly $5,000. It could be $6,000, it could be $7,000, you know, it just depends on the situation.
Right, and so closing costs are really like the throwaway costs. Like I said, they don't translate to equity or anything. So we really wanted to make sure that our closing costs were as low as possible, and any home buyer wants to make sure their closing costs are as low as possible because it's just money that's going out the door. It's not really benefiting you at all. So let's go through the details of our closing costs. So I'll just start with the total of what we paid, kind of the throwaway cost, which was $3,733.13. That was the amount of money that we brought the day of closing in order to close on our loan. So as you can see, $3,700, that was, you know, still a little chunk of change. I mean, do we think it's worth it at the end of the day? Yes, but just keep in mind that those really just are just one big bill that you basically have to pay, is the way that I think about it anyway. So what does that entail? It entails a lot of things. So there's a lot of fees when you close on a house. So let's go with let's just go down the list, shall we? So first we had a loan origination fees. Now, if you have student loans, you're already familiar with the concept of a loan origination fee. It's basically this like administrative fee that they charge you. So they tell you get a loan of $10,000, but they take out like $250 as like the loan origination fee, whatever the heck it is. So that's not really the amount that you end up with at the end of the day. So with a mortgage, same thing, loan origination fees.
So to put that into context, you take out $10,000, they charge you an origination fee of $200. Now you have $9,800, but you are still paying interest and all of that on the entire, you know, $10,000.
Yes.
So just so you know, for context, for people out there who didn't know that. Yes.
So they had a processing fee of $212 and an underwriting fee of $150. So the loan origination costs in total were $362. Now let's jump down to what they literally call services borrower did not shop for. So these are the things that the bank handled on our behalf. Things that we did not, you know, physically go and hire this person, that person to do X, Y, and Z. So those things included the appraisal. So when you get a mortgage, of course, the lender has to appraise the home to make sure they're not giving you more money than what the home is worth or what your mortgage is. So that in the event that we stopped paying our mortgage, they can at least recoup, you know, their costs and be made whole because they have some kind of trust that the house is worth what you actually paid for it. So they're not in a hole if that ever happened and they needed to repossess the home. So that appraisal costed us $475. And again, that was not someone we hired, that was someone the bank hired. Next thing was a credit report. Yes, they charged us to run our own credit. Stupid. $48 for a credit report.
They pull that thing like so many times.
And that was another thing that pissed me off, but we'll talk about that in a whole other video, like the whole process. So $48 for a credit report. Flood determination fee, $18. They got to determine if the home is in a flood zone. Don't know why, because I'm sure there's documentation out there from whoever owned the house before to know that it's not in a flood zone. But whatever, they charged us $18 to have a flood determination fee. Tax service fee, $88. I don't even really know what that is, to be honest. I don't even know.
Like I said, guys, just some fees that you don't know what it is, but you got to pay them.
Right, just fees. Then there was the title fees. So those are all the costs involved with examining the title of the home, the current title, to make sure the people who are selling it are the people who should be selling it. These aren't, fraudulent people, that all of the titling and everything is correct on the home, because you definitely don't want that to come back and bite you in the butt later on. It can be a really expensive process to fight if someone is claiming ownership of a home because things weren't titled properly, and it becomes a whole legal mess. So all that, they had the title exam fee, $150. The lender's title policy, $524.25. So that is title insurance, and we also purchased title insurance to protect us, as well as the bank did to protect them as well. What is this? Title obtained. Oh, this is a certificate they had to obtain from the town that the home is located in. That was $65, and then the settlement fee to our real estate attorney. So this is something we'll cover in the whole process, but we had the same real estate attorney represent both us and the bank. So what we did was the bank has a list of real estate attorneys that they are pre-approved to work with, and so it definitely helps you save money if you and the bank or whoever's lending share the same attorney's office.
And again, context. The bank is going to hire an attorney for themselves, so it definitely works in your favor, like she said, that your attorney both represents you as the buyer and represents the bank. If you do not use one of their approved people that can act as your your attorney and theirs, you can hire someone on the outside, but you will have to pay for yours and for theirs. So just keep that in mind. You're paying for both either way, so it kind of makes sense to really merge the two roles into one, so it saves you a few dollars that way.
Yeah, so that was $700. So all of those services amounted to $2,068.25. I will say that the $475 for the appraisal, we were actually able to pay it on a credit card, so that was kind of dope. It wasn't at least we got some points off of it instead of having to come up with a physical check like the rest of these charges here. That was the one thing we were able to pay in advance on a credit card. So total loan costs were $2,430.25. Now let's go to the other costs. Those were all the costs related to the loan specifically, and now we're going to go with other costs. So there were recording fees for the deed and the mortgage, the town fees or whatever. That was $475. What is this? Oh, prepaid interest. So one thing that our mortgage, our lender, our loan officer, I'm like, why am I struggling right now? Our loan officer actually got us hip to that we did not know going into this process was that he told us to try to close as close as possible to the last day of the month, because when you purchase a home for the day of closing, they make you pay the prepaid interest that would have accrued between the day of closing and the last day of the month. So for example, if you're closing on the 2nd of the month, you have to pay prepaid interest for the 2nd through the 30th, 31st, whatever the last day of that month is. So we closed on the last day of the month, so we only had to pay prepaid interest for one day, and that was $18.97, as opposed to the $500+ it would have been if we had closed, which we were originally scheduled to close. Basically, it was a difference of Friday to Monday. It was a difference of a whole new month. So it would have costed us over $500 more in prepaid interest just because of our closing date. So we ended up actually changing our closing date during the process to make sure it was the last day of the month. So that saved us some money on the front end.
Yep, so closing dates are definitely important. Make sure that you ask your loan officer, whoever you're dealing with, about these little tips, because like she said, a Friday to a Monday for us definitely made a difference in the pocket. And when you are making such a large purchase, those things definitely do add up and they help.
Absolutely. Then came our escrow payment. So the way our lender work and how most lenders work is they collect at least 3 months worth of property taxes up front to put in their escrow account. So what happens is, as part of our mortgage, we pay the bank the principal and interest on the loan, as well as a month's worth of property taxes, and they base that calculation off of what the current tax year's total, taxes are, and they split that up into 12 months. And so each month, that is also part of our mortgage payment, and they hold that money for the property taxes in escrow, and then when our property tax bill becomes due once a quarter, they then pay our property tax bill. So we don't pay it directly. It's paid through them, through the escrow. But to start, they wanted to fund the escrow account with 3 months worth of property taxes. So for us, that was $704.82. So technically, it's not necessarily a throwaway. That's money we're benefiting from. It's basically just us paying versus them paying. So we would have had to pay it anyway. It's just a matter of now we had to come up with 3 months up front.
And in some situations you can choose not to keep that escrow account later on. I believe that at least through the whole closing process you do have to do that. But afterwards you can say, well, hey, give me my money back and I will pay my property taxes and all these different things myself. The downside to that is that I'm pretty sure that there are a lot of negative consequences if you miss payments, such as penalties or even possibly running the risk of claims against your home. So it definitely just makes sense for you to pay the bank. The bank will then send the money, take the mortgage, then they'll pass on the next amount to the attorney's office where the escrow account is, and then they will pay the property taxes. So at least from you to all these other people, you're only paying one person, as opposed to having to remember to pay the bank, pay the town, the county, whatever. You got to pay all these different people. You just pay one person. So just a thought.
Yeah, pros and cons. And of course the terms will be different depending on the loan product you have, depending on the lender stipulations. They might let you out of it after a year or after whatever. Different, lenders have different terms. But we were totally comfortable being in escrow, so we didn't even stress that much. Now, borrower's representation fee. Again, this is the real estate attorney. Our part of the fee for our real estate attorney costed us $500. So that was our real estate attorney's charge. Then they had a separate charge to prepare the declaration of homestead. That was a document they had to draft. That was $75 that we had to pay them. And then our owner's title insurance, I mentioned having title insurance for both the bank and individually. We opted to purchase a title insurance policy, and that was $504.45. So that brought our total closing costs up to $4,708.49. Now, we ended up paying less than that. Like I mentioned in the beginning, we paid just over $3,700 because with the bank that we financed with, they have an incentive where they give you $1,000 off of your closing costs if you open a bank account with them. So of course, we opened a bank account with them and have our mortgage direct, we have direct deposit from our paychecks and then, auto drafting our mortgage out of that account. So for rewarding us for doing all of that, they took $1,000 off of our closing costs. So of course, that was clutch. And then also, after 3 months of them drafting, having the direct deposit and them drafting our mortgage payments, they are also going to credit that bank account with $500. So in all, $1,500 little savings. That definitely,
really nothing,
right,
so.
Which definitely helped. So that $1,000 credit brought our closing costs down to $3,708.49. And now there were a couple of things that then brought it back up to the $3,733 number that I quoted earlier. We had to pay 1 day's worth of the HOA because we were closing on the last day of the month and the seller had already paid for that month. So we then owed them $9.87 for 1 day's worth prorated of our HOA fees. And also for the 1 day of property taxes, like just everything prorated for that one day that the seller had already paid. So that's what brought it back up to $3,733.13. So those are all the closing costs. I know a lot of numbers, a lot of items, a lot of things, and it's definitely something that you want to focus on really closely when you're definitely a first-time home buyers. Understand what all this stuff is.
And when you are signing your closing documents, give yourself enough time. Do not rush. do not, think that you're holding up the process or whatever it is. Read those documents back and front because people make mistakes.
So that we talked about the down payment, we talked about the closing costs. So our monthly mortgage payment, which if you listened to the amount of the mortgage and the interest rate and you have a simple calculator from Google, you'll know what our monthly mortgage payment is. It is $971.97 per month. So that is our base monthly mortgage payment just for principal and interest. Then we have PMI. So PMI is private mortgage insurance. And usually with most loan products, if you do not put at least 20% of the home's purchase price down as a down payment, they will charge you usually about 1% of the loan amount each year for private mortgage insurance because you're more risky. You don't have as much skin in the game. You have a really low down payment. For us, thankfully, and that in our case would have costed us about an extra $200 a month, with our loan program, there is 0 PMI. Minimum down payment of 3% and no PMI, which was glorious. So, because without that, we honestly might have not even been able to really afford to go through with this process. So for us, we were super grateful that we do not have to pay PMI with our loan product. But it's something to be aware of for most first-time home buyers if you're not going to be putting down a hefty down payment, which most of us don't and can't, because who can afford 20% of a house like regular average Joe? No. So something to be aware of. Then we have our homeowners insurance. So for this go around, we paid $253 for our homeowners insurance. And you're probably like, oh, that sounds super cheap. Yes, because our home is in an HOA. So again, we own, it's a lot more affordable than like a regular house homeowners policy because we don't own the roof. We don't own the outside structures. We don't own the steps. We just own the confines within the walls of our home. So it was less to insure. And also we had an incentive, like a first time like client discount. So the full purchase price of that policy was about $300, but because it was our first time signing up with them, they wanted to give us this like welcome credit. We ended up paying $253. But going forward on an annual basis, we expect that policy to be about $300. So broken down into per month, if we want to put aside the per month amount, we're putting aside $25 a month to make sure that at the end of the year, we have enough money to then pay the $300. Property taxes. Again, basing that off of current year, property taxes, we pay about $235 a month. And again, like I said, that is wrapped up into our monthly mortgage payment. So when you add our principal and interest and our property taxes, I think the exact amount we pay is $234.94 or something like that. Yes, and 94 cents. That's what gives you our total mortgage payment, $1,206.91, that we pay to the bank every month. Then we have utilities, and thankfully our HOA covers a lot of those.
Everything,
so
for the most part,
yeah,
except for electric.
Right.
So pretty good. And we actually called and got an estimate as to what is the average amount that the unit pays for electric. And the previous owner was just like a single person, but it was like some astronomically low number. It was like $15 a month or something like that.
It wasn't that low.
$20?
It was something like $40 a month or something like that. We called and said, hey, like we're about to close on this house. Would you be able to tell us like what the average 12-month electric bill has been for this home? And they were able to tell us. It was like $40 a month. So we conservatively budgeted $60 a month. Is what we expect to be our utility costs going forward. Again, we're not living in the home full time right now, so right now, like, we just got our first bill, but it's not really a good estimate of what it will be going forward. That was like $17, I think, our first bill, because we're not really there all the time. So we expect that to be maybe about $60 on average per month going forward. So that leads us to our HOA fees, and our HOA fees are $306. And thankfully our HOA, we thought our HOA, honestly, our HOA fees are really, really good for what they cover. It basically covers everything. So
covers water, covers heat,
yes,
it covers all of those things. So like I said, the only thing that we have to pay for is our electric. So we can take, hot showers and as long as we want and not have to worry about, oh my goodness, like, you can't take a shower for 15 minutes if that's what you want to do because the water bill is going to be extremely high. Of course, there is some some ramifications of everyone in the community doing that. If everyone was doing this, then yes, the bill would go up and everyone in the HOA would probably have to pay increased HOA fee. But we don't anticipate it probably being that bad. Like, it shouldn't really be a problem if we were to do things like that, or wash clothes as much as we want, or Kiva to wash her hair for like an hour and a half in the shower.
Thank you very much. So heating is also included, which is clutch, because what really ran up when I was living in an apartment, what really ran up our electric bill was the fact that in the winter time, and we were in a basement apartment, so it was freezing in there. It was always consistently colder than outside. And y'all know these New England winters are harsh, so it was always freezing in there. So we would plug in, either a space heater, or we would turn on the heat in the apartment, and our bill would be astronomical. In the winter time, our bill was getting all up to $250 a month for our electric bill. And we were still cold. So I'm glad that at least now the one bad thing is that, of course, they determine when the heat goes on and off because the HOA pays for it. So hopefully they don't turn it off too early, or don't turn it on until like December.
We've been told that since there is a high population of older individuals, that they definitely do turn the heat on, and they keep it in a good cadence.
Yeah.
So we're hoping that is gonna be a good experience for us.
So our electric bill should really only be the lights that we turn on, the stuff we plug into the wall, and really our appliances are probably gonna be the biggest drain, because all of our appliances, like in the kitchen and whatever, are electric. Our stove, our refrigerator, dishwasher, washer, dryer, those kinds of things all run on electric. And also if we decide to put our AC units in the summertime, because of course that will pull a lot of electricity. But aside from that, that's really what we're paying for with our electric bill. And like I said, everything else is covered with the HOA, maintenance, snow shoveling, mowing the lawn, like all that stuff covered by the HOA, which is fabulous, a lower maintenance lifestyle that makes life a lot easier for us, stuff that we don't have to necessarily handle or do ourselves. All the houses in the community just got brand new roofs, so we know that's not anything we necessarily hopefully have to worry about water pouring in on us anytime soon. And then maintenance and repairs, of course, with our HOA structure, there aren't a lot of maintenance and repair costs. We are going to set aside a little bit of money just for a home maintenance fund, just in case, say for example, our refrigerator dies and we need to be able to buy a new one. So a small fund, maybe a couple $1,000s just to replace things like that. So just adding up all the costs and things you have to keep in mind to maintain this home, essentially what is our all-in monthly cost to live in this home. So we have our mortgage, like I said, $971.97. Our electric bill, which we are anticipating we're budgeting for $60 a month. Of course, as we are living there more, and actually get moved in and settled in and actually start generating, sizable bills, especially in the wintertime, that'll be, well, I guess not really, the summertime will be the true test of that, when we have ACs and stuff in. But assuming $60 for electric right now, $234.94 for our property taxes, and $306 for our HOA, in addition to $25 a month that we are putting aside for our homeowners insurance premium. That brings our monthly carrying costs to $1,597.91. So just under $1,600, which is exactly where we wanted to be when we started out with this home buying process. $1,600 was our comfortable limit. And for the fact that we found what we have, where we bought it, in the location that it's at the price we bought it, and just like the way the HOA structure is, like everything just came together in such a divine way that it's like yeah.
And it didn't start off that way, but it ended up that way.
The house was definitely a godsend.
Yeah, it was an interesting process. But we'll talk about that in another video. But like she said, we wanted to be at that comfortable amount, and trust me, I had, saw some things where I was like, hey, let's just spend more. Like, it's okay. But a lot of the things that I had really liked were honestly a lot further. So again, we were thinking about that all-in cost of having to travel to work for either of us, because with the move, I would have been searching for a job, so not really knowing where. I could have tried to have gotten something closer in the area, but some of the properties that we had saw were an hour away for her, so that would have been a little bit too far for her to drive on her own each day. So like she said, this definitely, turned out to be the best situation for us.
Yeah, and even just in comparison to what I was paying in rent before, for context, my base rent was $1,450, and then with our astronomical electric bill, averaged out over the course of the year, we were paying about $70-$80. So for all in costs, we were paying about $15-$30 a month, really, to live in a really rundown old.
And when you say $70 a month, you mean split between you and your roommate, correct? Or
yeah, split between me and my roommate.
Just wanted to give them context.
But in comparison, the alternative to buying a house would have been us moving into that same apartment. So just a comparison of what we would have been paying versus what we're paying with being homeowners. It's really not that much of a delta. It's about $70 more a month to live in a bigger, updated,
a bit more modern
space, that you own. So it was just it was a good financial decision. Hopefully, at the end of the day, it's a load that we're comfortable with, that we know we can comfortably carry, even in the, comfortably carry on one person's salary. That was one thing that we were really, really intentional about. And so that we know that we're not house poor, which is definitely not the goal with homeownership, is to be house poor and have all these random costs that you didn't consider from the outset, or because we didn't crunch the numbers properly. So we are really happy with the decision that we made. God's hand was definitely all up in this thing. I definitely believe that from start to finish. Sometimes in the start I questioned, but by the time we got to the end, there was no doubt. But at the end of the day, we are super excited to be able to have purchased a home, especially at this stage of life. Like the timing just worked so perfectly, where and we'll get into, like I said, the whole backstory behind how this even came to be. But the timing just worked out so perfectly, and to be able to buy a home at our age, we're still relatively young. I'm 23, Mishak's 25. We're getting married in a few weeks. Like, having this home established that we're able to move into as a newlywed couple at this stage in our lives is really just a blessing. So we're super excited about it. And as we move into it after we get married and get settled in, and we've already started making some changes and updates, and we have a empty house tour forthcoming, because we did manage to film some footage today that we closed. So we'll be able to give you guys a little bit of a house tour, and also what it looks like now after we've made some changes and updates and actually get some furniture into place. So we're hoping those wedding gifts come in handy.
So thank you so much for watching this very long video, but hopefully you found a lot of value. We'd like to hear what your experience was if you've purchased a home. If you're looking to buy a home, definitely comment down below. We'll be happy to share any knowledge that we have and any words of wisdom, and if we don't know, point you in the correct direction. So thanks for watching. Don't forget to hit the subscribe button and hit the notification bell so you never miss when we post new content. See you in the next one. Bye.